Good evening, everyone. We're just waiting a few moments for the rest of the attendees to join us, but thank you for joining us today on International Women's Day as well. Brilliant that you're here. We've got a really great panel session coming up for you this evening, but before we get to it, I just wanted to give you a bit more information about GAIN if you're not aware of everything that we do. Obviously, you're here tonight, so you know that we run brilliant events like this to give you more information and resources about working in investment management. You can also sign up to our newsletter as well, which goes out every week to students, detailing all the events, our internships, our mentoring program, everything like that. And you can find that at gainuk.org. And other than that, I think I'm going to hand you over to this evening's host, which is Christina Erickson. And the panel is What is Impact Investing? And she can talk a bit more about that and our panelists this evening. Please ask any questions during the session. There's a box at the bottom. They'd love to answer your questions. And without further ado, Christina, I'll hand over to you.
Thank you very much, Becky. And hello, everyone. Thanks for joining us this evening and happy International Women's Day. We are very fortunate to be joined by three very enthusiastic and well-achieved women in the industry. And I think you're going to enjoy this evening's session, hopefully. As Becky said, please do ask any questions as you'd like throughout the session. We'll try and leave some time at the end where we will answer as many as we possibly can. In the meantime, I would like to just briefly introduce myself and then hand over for the rest of the ladies to do the same. So myself, Christina Erickson, I'm an institutional business development officer covering European ex-UK institutional clients for an asset manager named Mondrian Investment Partners. I'm based in London, and without further ado, we'll do a brief introduction to the rest of the ladies. Vanessa, why don't you go first?
Yes, hi, good evening all. Vanessa Carvalho, I am an investment manager at Mirova, which is a French asset management company based in Paris. I'm based in London, and there I'm part of the private asset investment unit.
Fantastic. Do you want to go next, Marina?
Yeah, sure. Hi there. I'm Marina Leacock. I'm an analyst portfolio manager at Lazard Asset Management. I've been here 19 years, slightly worryingly. And I'm an analyst, and then I'm also a portfolio manager, and I manage a strategy called Minerva, which invests with a gender lens.
And Kimberley.
Hi, yeah, my name is Kimberley Pavier, and I'm a sustainability analyst working for the UK-based global tech team at the asset manager Janus Henderson. That means I look after both the Global Tech Leaders Fund and the newly launched Sustainable Future Technologies Fund, which has a dual mandate, which is basically to create financial returns in a sustainable way.
Fantastic. Now, we will all do a little bit of a longer introduction to ourselves, just to kind of lay out where we came from, our journey along the way to where we got to today, which will give you a better flavor of who we are, I think, and kind of how we have evolved over time. So starting with myself again, basically, as you could probably tell from my name, I'm actually Swedish, and I have not lived in Sweden since 1996. In fact, I left right after high school to do a couple of gap years, it turned out. It wasn't meant to be many, but it ended up being more than 2.5 to be exact, which I spent most of it being an au pair, once in Israel and once in Luxembourg, of all places. I then ended up in a contract job in a private banking office in Luxembourg before I decided to return and study. And I moved to California, the US, to start my studies at university. My major at the beginning was accounting, which I changed within the first year when I had done an accounting internship and decided that wasn't necessarily for me. I replaced that major with a finance major and subsequently graduated in 2003 with a Bachelor of Science in Finance, and started my first role on a trading floor in the US for an asset manager, which today is a Dimensional Fund Advisors, manage over 500 billion in assets. So I started my journey on a trading floor, which was very man's dominated at the time. 2003, I was one of 12 people on the trading floor and only one of 2 women. So very male dominated, which kind of set me up, I think, in a good way, in a sense, because I learned very early on how it is to work within a male dominated environment. And I learned to stand up for myself. And I think that's kind of helped me to get to where I am today. I didn't stay in the US for long. I stayed for 2 years. I moved over to Europe with the same company, and subsequently over the years evolved into a client-facing role, which is what I'm doing today, and I have been doing for the last 16 odd years. Today, looking after the institutional clients in particular, as I mentioned, in the European ex-UK markets. But because of my background being Swedish, I have covered the Nordics to quite some extent over the years. And this particular market of the Nordics, as you'll hear from the other ladies possibly, is one of the regions which has kind of been the leaders, so to speak, within ESG investing and impact investing, in fact. And so a lot of kind of initial initiatives and standards have come out of the Nordic markets. And as such, speaking to clients and prospects in those markets means I get to very often discuss and explain and communicate around ESG and impact. Although Mondrian Investment Partners, which is the firm I represent today, only offers one impact fund, we do actually integrate ESG over all of our assets that we offer our clients today. So that's just a bit about myself. And I think you will find that the rest of the ladies have much more exciting stories to tell, but why don't we start with Kimberley?
So just like Christina, I'm actually not from the UK. So I'm originally from Germany. I grew up in Germany. I'm actually a child of a military person. And so I moved around a lot. I was exposed to lots of different cultures and different backgrounds very early on, which kind of made me enthusiastic about diversity and understanding how different people operate and how you had to adapt quickly to different situations, which I think has been key for my career, to be honest. For me, sustainable finance is a way to combine my many passions, be it my creativity, to my numerical skills, to finance, to loving to be around different people, different cultures, different opportunities. And so actually, I started off my university career, so to speak, in fashion. So I actually became a professional seamstress while I was studying for my A-levels back in Germany. I interned at a few German fashion houses. I made costumes for the Berlin Musical Theatre and the Amsterdam Opera House. And so fashion management in Amsterdam was where I was headed. I was passionate about, I was keen to explore. And very quickly, I realized that it wasn't enough of an intellectual challenge for me. So I missed my maths, I missed my sciences, I missed the problem solving that came with that. And so I decided to do a certificate in international business management, where I was introduced to topics like economics and accounting. So I thought they were fascinating. And I spent a summer at the University of Cambridge focusing on science and topics like metamaterials, which are really interesting topics that have properties that can bend light, for example, to make them invisible and things like that. And this inspired me to study chemical engineering and to do biochemical engineering as a master's, which I loved. And it basically was problem solving in a creative manner, no matter what the problem was. And here I focused on ESG themes without realizing that they were ESG themes at the time. Things like hydrogen catalysis or carbon capture and stainless steel versus single-use biomanufacturing equipment. And while I was studying that, I also spent 2 summers at Utilities Centrica, where I first looked at smart metering and then alternative energy, and I worked as a finance business partner. In my free time, I loved investing. I found the world of finance slightly intimidating, I'm not going to lie. I thought it was really dynamic and vast and fascinating. And so the more time I spent, especially here in London, the more I was involved in meeting asset managers and banks and things like that. I really seemed keen to pursue this. And so what I did was I started working at Credit Suisse in equity sales and relationship management. And I really saw a gap there in sustainable funds. And so I created the role of ESG and impact sales specialist from scratch and became a kind of ESG consultant across the bank. Now, everything that I've just said has been very environmentally focused, but my real passion is actually on the social side of things. So in my spare time, I created my own social enterprise during university called Inspiring You. I saw a real gap between academia and actually the real world, things like nobody really taught me about taxes, about financing, about what is branding and what is marketing. And I think everybody should really need those tools in their pocket. And so I started this social enterprise called Inspiring You, trying to inspire students, especially from the Leeds area, which had a lot of people from disadvantaged backgrounds, to pursue enterprise and higher education and to have those tools in their pocket. I've always been involved in gender and ethnic diversity networks, and I've always been quite active in mentoring. And so a few months ago, back at the start of last year, so actually nearly a year ago now, I was looking for a new challenge. I wanted to be more in depth with ESG. I wanted to be more in depth with impact. I really wanted to dive deeper in the world of investment analysts. And I've always been very passionate about tech. I think tech is a real enabler of positive social and environmental change. And so I started at Janus Henderson within the UK-based global tech team to really dive deeper in that area. And their newly launched fund, Sustainable Future Technologies, gave me that positive impact overlay, which I was really interested about. And so here we are now.
Fantastic. Thank you, Kimberley. Marina, would you like to go next?
Sure. So it sounds like we've got a completely international team today, which is hilarious. So I'm Portuguese. I was sent to boarding school in England from Portugal when I was 11. We were one of 6 children, and we were all sent to boarding school here. And I ended up staying. So I ended up going to university here, and I did a master's of civil engineering, predominantly because I didn't know what else to do, is the honest answer. I was always quite good at maths and physics, and I quite like the idea of sort of constructing something and leaving a legacy. But the reality of civil engineering came down with a big crash when I had my first job, and my first job after I did my master's was building a platform on the Jubilee Underground station. So essentially I spent 9 months underground in my hard hat and steel cap boots, and that put me off engineering for life, sadly, which I probably could have had a different experience. I might have carried on. And then I applied to finance, and I literally knew nothing. I'd never studied finance at all at university. So I got a job at Invesco doing what's called an RFP. So it's a request for a proposal. So as part of your marketing, companies like Lazard or any other asset management manager has to put together a proposal of how you'd manage your clients' assets. And it's a brilliant learning start, because it teaches you all the language of finance, I guess, and it teaches you all the different strategies. And then, so I did that for a little bit, and then I was headhunted to move to Lazard, and I started as an equity analyst, research analyst. And the way we do it here is we research companies on a global sector basis. So the point of an analyst is to find the best companies anywhere in the world according to your sector. And when you first start, you're given 2 or 3 little companies, and you'll have a mentor. And again, I knew nothing. So, I had to teach myself how to do all the financial modeling, and I was then sat all the sort of banking exams that you do. But it was brilliant to, over time, just gain that confidence. And I also think what's fabulous about the way we do it is, even if you're quite a junior analyst, you can put capital to work very soon. So you're very quickly responsible for covering certain companies, and if you like them and you've done the research, and obviously it's supported by the portfolio managers, as a firm we'd invest in those. And then, so over time I sort of accumulated sectors. Most people will do 1 or 2 sectors, and I now do consumer, business services, tobacco, and retail, which is too many, to be honest. And then about 3 years ago, I decided to launch this gender lens strategy as a portfolio manager. And that's been a brilliant evolution of my career, because it's taught me a whole different side of investing, which is the portfolio manager side. So this is where, as a portfolio manager, I will build a portfolio of a whole bunch of different companies that are recommended by the analysts. Again, it's their job to find the best companies anywhere in the world. But as a PM, I have to make sure that we diversify by risk and geography and sectors, and make sure the portfolio makes sense. And one of the great things about the strategy that we run is that we have this gender lens. So not only are we trying to invest in companies that do well when it comes to gender diversity, but also we're trying to engage in these companies to make them better, because we fundamentally believe that gender equality is a structural challenge that we all have to solve as investors.
Amazing. Thank you, Marina. Two very, very different, but still very interesting career paths. Vanessa, looking forward to hearing from you.
Yes, last one, and indeed a very international team. So at least I shared the language with Marina. I am a Brazilian. I moved to UK in 2014. In terms of a choice of my school years, my graduation, I actually wanted to work for UN, international politics and relations. I guess during these times now, I realized I did a good choice of not moving to that career. But one of the key message that I had at the time of choosing my course and my major was what can give me some sort of a broader range of choices once I go to a career path, especially because, as probably most of you, choose the major when you are 17, 18, and there is such a big world to choose from. So I chose economics just because I like the maths, I like geography, and it was a good match for me. So I graduated in economics bachelor 2007, and during this time, I quickly moved to finance, to be honest, in different roles, initially as corporate finance. So always on the private asset, and just as a context, right, there is the public equities, public bond investment, and there is the private companies, private assets. I have been always on the private asset business, initially with a corporate finance on the banking side. I think it's a great entry point for an investor because that's where the modeling comes in. You understand from one side, you have engagement with clients and companies at the junior level, but it's a good base. From that, I moved to more broadly impact investing, which I think at the time was more focused on development, especially where I was from, right? Brazil is an emerging market, so effective impact investing there is almost like everything you can do to improve the situation, for example, in water or sanitation quality of the population. So I think that's where was my start of impact investing, even though people wouldn't call impact investing at the time, but pretty much as corporate finance or development finance. So I really dig deeper in impact investing as we know today. When I moved to London in 2014 to do my MBA, and here is where the impact investing was gaining traction. I spent 5 years in investor focus on Africa and South Asia, so had a bit of experience in Latin, but a bit of other emerging markets, and that was a very important reality check for me in terms of how different, especially because I was living in London, so having the face of reality of what sustainability meant for South Africa vis-a-vis what it means for the UK, for example. So I spent 5 years there investing in companies across a different range of sectors, renewables, food and agriculture, the principle of a circular economy as well. And more recently, I joined Mirova, which is a UK French, is a French asset manager with offices in the UK. We manage overall 27 billion of assets. Most of it is in the public side, on the public market, and what the colleagues, some of them work here. Particularly, I am the private equity part of the business, so looking at the blue economy and also environmental technologies to tackle issues like as we see today in agri-tech, in circular economy, in clean tech, smart cities, and so forth. So for me, it's a great experience to have gone through emerging market focus to developed world, but always with this very close contact to companies and promoters and entrepreneurs, which is very inspiring on a day-to-day basis to meet so many people trying to do good things.
Amazing. Thank you so much. that was a really good, broad, view on how diverse the investment side can be actually, and what we've all, I think, exhibited is that there are various avenues that you can take within this industry, right? And I think one of the main messages I think is here that you can have a very, very challenging but extremely rewarding career in investments, and it's really how you think, which is actually your biggest asset, I think, especially within impact. It's who you are and how you think, and how you apply that to your everyday work, which is absolutely your biggest assets here. So going then into a bit more about impact investing in particular, maybe starting with you, Kimberley, if you wouldn't mind just maybe giving a broader view of what is impact investing really, and how does it differ with some of the other more familiar, perhaps, acronyms, but please explain them in more detail, such as ESG, SRI, CSR. These are the acronyms thrown around broadly, but they do have a difference between them all. And if you wouldn't mind just giving us a nice overview of that. Thank you.
Absolutely. So what is impact investing? That's actually a tricky question, because there's not one definition out there, and there's not one approach in how you measure it or how you quantify it. So, for example, even the regulators at the moment are trying to figure out, what does positive impact mean, and what are sustainable activities, for example. So the EU taxonomy is a good example of this. They're really trying to define what actually is a sustainable business activity. So the green or environmental taxonomy was published last year, but only climate change adaptation and mitigation is truly defined at this point in time. And the social taxonomy has just published a draft in late February, and they're going to cover the main objectives of decent work and adequate living standards and well-being and inclusive and sustainable communities and societies. But again, they have not really clearly defined what the metrics behind that are, what the sub-themes behind that are, etc. And the green taxonomy has 6 pillars. Like I said, climate change adaptation and mitigation is defined, but we're still waiting to hear about pollution prevention and biodiversity and circular economy and water, for example. So impact investments are basically investments made with the intention to generate positive, measurable social and environmental impact alongside a financial return. So intentionality and materiality plus the measurement aspect here are key. That often the funds are done with a thematic angle, or they might be aligned to the UN Sustainable Development Goals, for example. Us personally, in our Sustainable Future Technologies Fund, we use 8 environmental and social themes. These can range from low carbon infrastructure to smart cities, sustainable transport, data security and tech health. And we invest in mainly public equities, but a lot of different funds will invest in lots of different asset types. So it could be something that's fixed income or other investments there. I think for impact, a real key is the engagement with companies. So we do have quite poor data at the moment, and we do need to encourage our companies to be better stewards and to disclose more and to figure out how they can create this positive impact via their revenues, but also via their operations. And so engagement really here is key. There's a bit of a myth around impact investing that it doesn't generate financial returns. So according to the Global Impact Investor Network, actually more than 88% of impact investors report that their investments met or exceeded their expectations, with 67% achieving market rate returns. This is kind of in contrast with some of the other definitions that you'll hear. So a definition, for example, for ESG would be basically taking environmental, social, and corporate governance factors into the process alongside financials. So ESG can generate a positive impact, but it's not necessarily a positive impact fund. So if a fund integrates ESG, that doesn't mean necessarily they're targeting net positive impact. So that's something to look out for. And then corporate social responsibility is a self-regulating business model, really, that helps a company become socially accountable to itself and its stakeholders around it. Now, another term that's often used is socially responsible investing. And so SRI and ESG are 2 approaches to impact investing, different kind of levels of impact investing, but they kind of mean similar things. And in terms of impact investment, the growing impact investment market provides capital to really address the world's most pressing challenges in sectors such as sustainable agriculture, renewable energy, conservation, microfinance, and even things like affordable and accessible basic services, including housing, healthcare, and education. And so a lot of funds will often use the IMP definition of, okay, how can impact be measured, which is via the what the who, the how much, the contribution, and the risk. And so those are just a few definitions of impact, but basically it just means trying to generate a positive and social environmental impact. And I think what's really key here is understanding that it's a net positive impact. If a company is telling you that all their operations and their products and their services, everything is for the greater good, I think that's a really tricky thing to actually look at. And I think at the moment people are really trying to figure out, okay, what's the net positive impact and which areas are more material and which ones are less, and how do you actually measure that, which is actually quite tricky right now, but is also really interesting because the world of impact investing and ESG investing is changing so rapidly and new tools are being developed every day. So it's a really fascinating place to be.
Absolutely. That was a really good introduction. Is there anything Marina, Vanessa would like to add perhaps to this? No. So I think maybe one thing just to point out, and we have Vanessa basically looking after private markets, and obviously Kimberley, Marina more on the public side of things. And you mentioned, Kimberley, engagement being a very important aspect of impact investing. I think that is definitely, I think, the biggest, maybe the differentiator a little bit between the more generic integrated approaches, perhaps, and impact specific approaches, but also measuring the actual outcome of those investments, right? I think is the other key differentiating aspects. Vanessa, is there anything else, like from a private market side, perhaps, that you would say is different from public market? Because obviously with the public markets, you're one of many external stakeholders. On the private side, you may have a bigger share, so to speak, and perhaps a bigger voice as such. Is that your view? Or would you say it's not so much? Or you're on mute, sorry.
Sorry for that. So I think on the impact, private equity, let's put it this way, or private assets, I think we have pretty much most of the investors very conscious of being majority. So I think it's more the type of transactions as well, like impact investors usually look for growth capital rather than large LBOs or things like that sometimes are controversial. I think we also, apart from the ESG metrics that Kimberley explained it well, how it's different. I think also from a perspective of working together with management to identify gaps potentially in the business plan or in the management, especially for depending on the size of the company, especially if it's more early stage companies where sometimes they need some support from institutional investor to bring the governance to another level. I think that's also another point for consideration, which I think I in my experience at least, the impact investors tend to be more hands-on compared to other private asset investors.
Yeah, very good.
Even though like they still have a minority, but usually we ask for governance rights in terms of a board, sometimes in mission committees and things like that, where we can actively participate not only in the business strategy as supporting the company, but also driving the impact plan and things like that.
Yeah.
Christina, it might just be worth explaining what engagement means, because it means different things to different people. So, engagement just means usually you have to do a lot of research before you engage with a company, because we've got to remember that we're talking with the CEOs and CFOs and the boards of the biggest companies in the world. So it's a real privilege as an investor to be able to do that. But also because we're shareholders, they value our opinion and they want to listen to what we have to say. So when you engage with the companies, you'll ask for a meeting with whoever it might be, the board, CEO, CFO, and you will have a very specific objective of that engagement. So for the diversity strategy that I run, for example, I might be asking for them to increase their disclosure of their diversity data, or I might be asking them to increase the representation of women on the board or diverse talent on the board, on the executive committee, increase their policies and procedures, whatever it might be. And the idea is that you have a very specific objective of that meeting. And the idea is hopefully the businesses you're engaging with see you as partners. So part of it is not only you're trying to force change, but you're also trying to share best practice and you're trying to get them to change. Usually what happens is after you've engaged a few times, companies, asset managers might choose to actually vote against the management or vote against the board if they're not seeing sufficient change happening fast enough. And also what we're seeing more recently is collaborative engagement. So when you have different asset management houses engaging with the same company at the same time, because you obviously have a bigger voice the more capital you're representing.
Yes, it's a very good point. And yes, thank you for elaborating a bit on what an engagement actually means. Sometimes we forget. And that's, yes, it's not so obvious to everyone. So maybe there on Marina, wouldn't you mind also then perhaps expanding a little bit about the history of how responsible investing has evolved over time? Kimberley touched a little bit upon it, you know, as to how it has, but if you wouldn't mind maybe elaborate a little bit further on that.
Yeah, sure. So I'll split the history lessons into two parts. I think is the easiest way, because as Kimberley said, there are so many different acronyms, and it's quite confusing. So pre-2000s, I'd say, sustainable investing was mainly focused on two things. One was exclusion, and two was the environment. And I'll just spend a little bit of time explaining that. So the exclusions were originally driven by sort of religious investors who wanted to align their investment portfolios with their ethical beliefs. So they avoided investments in things like gambling and alcohol and weapons. And then we went through a period of increased interest in the sort of through the Vietnam War. Then we went through a period of SRI, accelerated in the 1980s. And this is when investors wanted to avoid companies that were linked to, for example, apartheid in South Africa. So that was the whole exclusion element of it. The second point was in that period was an increased interest in the environmental issues. So we had the emergence of green thematic funds addressing environmental issues, and they tended to be quite small. And the generalization of that period was, whether it's ethical or SRI or green funds, they were considered to be quite niche. They were managed by separate investment teams that tended to have sort of non-investment professionals. They were exclusionary, and therefore they weren't really considered appropriate to sort of large institutional investors. And there was, to Kimberley's point, there was this fear that you were sacrificing returns, and that was in conflict with your fiduciary duty. I think post 2000s, there's been a very different approach, and today is very much about ESG integration and impact, and it just reflects the sort of level of environmental and social challenges that we face today. And I think there's been this acceleration of sustainable investing that's become from sort of niche to mainstream for four main reasons. The first is climate change, and it's just resulted, you know, there's an overall acknowledgement that climate change is such a structural challenge, and really has led to a momentous shift in how we think about environmental and social issues and the intersection of that with investors. The second, I would say, is regulation globally, but in particular in Europe. So this has led to more ESG disclosure. So most companies now have to disclose their carbon intensity, their water consumption, etc. But also it's led to sort of ESG indices and investment products. And there's been a lot more scrutiny and increased demand for disclosure and accountability of companies' behaviors. The third, I would say, is the asset owners themselves. They increasingly recognize the sort of systemic risks, such as climate change, is something that they simply can't diversify away from. So they're demanding asset managers like Lazard and all of us to genuinely integrate ESG into their investment strategies. And the last is the businesses themselves, I would say. So companies are responding to these changes sort of almost ahead of regulation, and they're starting to align their compensation, their executive incentives with sustainability goals. And so we're seeing this major shift from the previous maxims of maximizing shareholder value to more of this sort of global stakeholder approach. And I think these 4 points have made ESG and sustainable investing going from something that was relatively niche to being completely mainstream and really critical for all the stakeholders involved.
Very good. Did you want to add something to that, Vanessa, or?
Yeah, just I would add, just to complement, I think the evolution is also on the private asset business here, just to give an overview. To Marina's point, right? There should not be a compromise between financial returns and impact returns, and quantifying these and aligning these is very important. For example, a lot of funds nowadays are being structured where the part of the fee that the client pays, it's sometimes related to the impact achieved by what we promised to the investors and what we achieved at the end. And I think that's also a great evolution nowadays on the market, so that effectively what we promise, which is at the time of in the fundraising, let's say, we at the end of the day we deliver as well, not only from a financial return, but the impact. So the teams being incentivized also from that perspective ensures that this right governance from the impact assessment and analysis is done properly at the beginning of the investment.
Yeah, that's a good point. Aligning your interests obviously with the clients ultimately it's what's important here. So it's a balance, obviously, between the risk reward in these type of investments. I think we can all safely say that, yeah, we moved on from thinking that we have to give up returns. It is a risk that needs to be incorporated into the investment analysis, and you can't ignore it. Basically, it's becoming such mainstream now. In fact, I typically say, I think 10, 15 years from now, no one will talk about ESG anymore, because it's just going to be part of a natural investment process for anyone. You can't ignore it, basically. So that kind of leads us into the next question, which I had for you, Vanessa, actually, and this is more in regards to the way you could implement a process, looking at these factors and impact. There are various ways of doing so, obviously, integrating it into the investment process with a separate team, analyzing, or completely integrated where the portfolio manager itself does the integration. Would you mind just expanding a little bit on those various ways and how that might differ depending on perhaps strategy or market or manager even?
Yeah, I think that's true, and it depends also a lot on the type of manager and the size of it, right? I think when we think about smaller funds, more niche, perhaps in terms of a headcount, they try to go with a more combined approach to make sure that they deliver the right balance. But as we see ESG and impact investing overall moving more towards the mainstream funds, let's put it this way, we feel that I think that the separation, the investment, let's say origination and investment life cycle, it's important to have most of the time. At least in my experience at the investors that in the houses that I work at, there were always a balance, a helpful balance in coordination, where, for example, the team that would originate, assess the company, propose final investment would be composed by colleagues with different skill sets, sometimes technical, financial, and also ESG. And usually ESG impact was always considered as almost like the compliance. They know your customer, just make sure that you don't do anything wrong, let's put it this way. But nowadays I see it much more as a room of actually clients asking who is your ESG, as important as who is your key man or key person on the fund. So I think that's a very interesting move. And of course, there's no silver bullet. I think all investors are looking for different ways and different balance, but my experience of having the two skill sets separate, but at the same time working together is very complementary, especially because there is a helpful and a healthy let's say exchange of ideas and thoughts about the same problem.
Very good, thank you. I think this is a good time to then pivot into a bit more on what our individual roles perhaps mean, and what kind of skill sets and elements are changing perhaps within those roles. So, I mean, just to set the scene a little bit, so all of the managers represented on the call today are essentially managing assets on behalf of third parties. So investors looking to allocate into these markets, and we take on control of those assets essentially for these investors. Each of us have a slightly different role. I don't manage investments, so you're not going to hear much from me, but maybe starting again with Vanessa, if you wouldn't mind, just give a bit brief overview of kind of what is your role as within this investment process.
Sure. So I'm part of the investment team, which is basically responsible in our team is usually very flat in terms of no matter your level, if it's analyst or director, everyone somehow have the same overall responsibilities with a different, let's say, experience and how you apply that. But what we do is my role involves finding companies, private companies that we think that are interesting to invest on, or either we proactively go there and talk to these companies and learn more about their business model, or actually we are reached out by advisor or bankers that are acting on behalf of those companies to fundraise. Once we have the initial contact, we start having the discussions with the management, understand more about the business model, financials, and at the same time, as I said, this is the key difference of impact investor is looking at the ESG, and the ESG, we at least in my experience, we always had it at two angles. One is ESG compliance, that's a veto, so you can go or not, and then there is a impact, or the net impact, net positive impact that Kimberley mentioned. That's where we decide that we want to go. So there is a veto and let's say approval or a desire to go forward. So during this process, we assess the company in different angles. We put a strategy of what would be the right metrics, the right incentive structure, the investment, the structuring. We go through this what we call due diligence process. We sign final agreement, shareholder agreements, active subscription agreement, and then we do the investment over the life of a holding period. We participate if it's a minority active investor, which is the case of usually impact investors, is that we sit on the boards. We sometimes have a subcommittees if we wanted to highlight specific gaps on the companies, for example, on the ESG, if we identify gaps or put a plan, we wanted to make sure that the company is on track of that. And of course, we follow the performance of the company in both financial and impact. So that's one of the interesting things. Usually you have an impact plan sometimes, most of the times nowadays on the impact investing world, where we basically set targets together with the company of things that they need to achieve, or will be usually it's associated with the core business model. So it's trying to quantify the net positive impact that the company will have in specific sector in specific ways. And we follow that as well to make sure that that is on track. So this is a bit of a nutshell what we do.
A typical day in your world. Yes.
Yeah, definitely not a routine. So I think that's the good thing about it in these industries, that sometimes you're super busy, you're working very long hours, and sometimes you just don't need to work on the 9 to 5, and that's okay. So that's good. But the typical routine, if I am the proper execution of deals, is managing the due diligence process, assessing the information flow, data room, and then at the same time, to be honest, everybody does a bit of everything. So also following up on the portfolio companies and keep originating. So I think the process here is usually depending really much on the company, but 2 to 4 months of investment cycle. So you in the time that you are securing one investment, you should be trying to originate the next one, let's see, so that effectively you manage the work. But yeah, it's a very interesting, and like we end up seeing a lot of different things. So I think that's the beauty of it.
Amazing. Marina, would you like to go next to give us kind of an idea of what you do within your investment role, in particular for Lazard?
Yeah, so I'm on the public equity side, so I invest in equities, and so I spend some of my time. What's the best way of describing this? So when you're thinking about investing in an equity, you spend a lot of time trying to understand the industry first and understand how that industry works, and then you go and understand the different companies within that industry. And I try to, even before I start doing any sort of financial modeling, I try to very simply understand how business makes money. And I usually just have a plain piece of paper, and in one piece of paper, I need to explain to myself how that business makes money. Because I think you need to understand the competitive advantages that makes that business what it is, and work out whether those are sustainable going forward. So then you do the financial modeling, which is the bit of my job that I like the least, I must say, despite the fact that I'm quite enjoy maths, but I just find it quite tedious, but it's sort of a necessary evil. And then the bit that I enjoy the most is actually going out and seeing the assets, going out and seeing the companies, seeing the warehouses, seeing the refiners, seeing whatever it might be, meeting the divisional management, because I think that's when you sort of understand the soul of a business. And that gives you confidence in investing. And then we have this amazing privilege of speaking to the senior management, which is a privilege. And I think once you've been covering companies for a very long time, you get to a stage that you're almost advising them and they're seeking your counsel, which is fabulous. And then we invest, obviously we invest in those companies. And then as a portfolio manager, it's trying to build a portfolio that is sensible and is diversified for risk.
Amazing. And do you meet these companies one-to-one, or is it typically with other stakeholders?
Usually one-to-one, and if you're big shareholders, which we often are, we meet them sort of very regularly, which is, I think we should also address the sort of trickier part of our day job, which you have to be honest about, which is crises like today, or any crisis. And I think doing this job when you've got stocks down 50% or 60% is really stressful, and you can't pretend that it's not. And I think we wouldn't be being fair to the ladies who are listening to us today by pretending that it's not. But it can also, obviously, all the horrendous stuff that's happening, from a stock perspective, it can also be really exciting, because our job is to allocate risk. And if a stock's fallen 50% and you don't own it, it gives you this amazing opportunity to buy a stock that you previously might not have been able to buy.
Yeah, well, and challenging your own decisions, right? Considering all the broad ranges of outcome that your investment could actually have. That must be thrilling, right?
Yeah, and I think there's an element you definitely need to have a bit of a thick skin, and that that sort of grows with experience. I don't want people to think that you're expected to have that day one, because you're not. And also you have a very supportive team around you. And the idea is to just be very methodical, understand the risks and the opportunities that you're taking, and try and value that. And you get things wrong. Of course you get things wrong.
But that's just back up, right?
That's part of the job.
That's right. Then you have done your job, essentially.
Yeah,
you can't control everything, unfortunately. Kimberley, would you mind taking us through what your day today looks like? I guess it might not be the same every day either, but perhaps just to give us an idea of what your role is.
Absolutely. So I'm in public equities too, just like Marina. But just like Vanessa mentioned, there are different setups in terms of ESG and sustainability. And so Janus Henderson has a central ESG team, which helps us with data and voting, for example. But my job as sustainability analyst is dedicated to these two funds that I manage. And no one sustainability analyst has the same role, to be quite frank. Right now, it's changing. Some are quite close to the investment process, some are a bit more removed. I'm quite close to the investment process, and I'm a key part of it. And so my day-to-day will vary from setting up our ESG processes, like our proprietary ESG ranking screen and speaking to the different ESG data providers, to responding to client requests on sustainability, but also challenging our investment analysts on their stock picks in terms of ESG. Is this name a ESG leader? Is it a transitioner? Is there negative momentum happening? Are there controversies assessed with the name? And what could that mean for valuation? So we've been working on some internal analysis that really proves that an ESG premium can lead to a valuation premium. So that's really a key area. I also have to keep on top of controversies, like I mentioned, changes in ESG momentum, provide kind of like an oversight role as well for our analysts. And also I'm a key part of the voting and engagement. A big part of my time at the moment is actually with regulation, reporting, labeling. So basically being able to sell your product in different countries and making sure you're adherent to the local regulation. But I also spend a lot of my time on UN Sustainable Development Goal mapping and impact analysis. I find impact analysis really fascinating because it's basically looking at revenues, for example. So we only invest in companies that map minimum 50% of their revenues to our 8 sustainable themes in Sustainable Future Technologies Leaders Fund. And so that's a real key part of my day-to-day job. I also look at the analysis of their operations and how they're treating their communities and things like that. I also get to explore sustainable investment themes, which I find are fascinating, and look at my own little stock picks. Within tech, it's also quite important to look at that valuation, to navigate the hype cycle. So as you might have seen in the last 20, 30, 40 years, tech has been a real provider of growth, a real provider of valuation premium, but figuring out how to navigate that without kind of riding the hype cycle. We saw the hype cycle in hydrogen a few years back now. We've seen hype cycles and all sorts of things. And so to really navigate that is key. I'm also studying the IMC to help with the kind of financial side of things, the investment analysis side of things. And I also find it fascinating when I get to travel. So obviously with COVID, there hasn't been a lot of traveling, but I was beneficial to go to COP26 last year, which was fascinating, and to go to different industry expert events, to speak to climate scientists and innovative companies. As Marina mentioned, we get real access to great real leaders in that space. I also get to look at topics that I think have been historically overlooked. So things like digital democratization and financial inclusion, but also things like biodiversity and deforestation and sustainable agriculture and food. And I mean, sustainable agriculture and food, I could speak about for hours and hours, to be honest. It's about 24% of global GHG emissions, and a big chunk is due to waste. It's just a very inefficient system, and tech can be a real enabler here. So we see tech as a science of solving problems, and even though the ICT sector itself is only about 1.4% of global emissions, it can actually help over 15% of global emissions to decarbonize when you look at the full value chain of a process. I think a supportive team is really key. As Marina said, the job can be quite stressful, it can be quite dynamic and changing, and you have to work long hours sometimes. I think if you don't have a supportive team here, it can be quite tough, but I'm lucky that I have a very supportive team, so that's fantastic. And I think another thing that I really love about my job is that sharing best practice of ESG with companies. when a big global Asian company comes to you and say, what should be in our decarbonization strategy, and you then encourage them to be climate neutral by 2030, I think that's fascinating, and it shows a real impact of our engagement there.
Fantastic. Yeah, it is really, I think all of us, I speak for all of us when I say that it's a career which also allows you obviously to explore and visit many countries and get the exposure not only to the actual companies that we might be investing into, but also especially from the business development side, get to meet with investors, you know, and significant asset allocators, you know, and that is also a privilege, just as much as I think meeting the companies we do invest in. So we're running out of time from our perspective here. We have quite a bit more we wanted to cover, but it's not going to be enough. We have 5 more minutes. I wanted to make sure we open up and allow people to ask any questions. I've not seen any questions come through on the chat, which I don't know if it's because I can't see it or if it's just not come through. I think maybe we haven't had any. So
I think there is one, but maybe I think we already covered somehow.
Okay.
Which is the difference of impact between the role of a relationship manager of institutional client versus the role of working directly in the investment team. So I guess it's more for you, Christina.
Oh, yes, of course. Oh, yeah, I see it now. Sorry, I had another window open. Yeah, so I think it's, yeah, thank you so much for the question. And definitely, like I mentioned earlier, you know, being the kind of conduit between the end investor and the company that you obviously represent, in my case, Mondrian Investment Partners, you know, we have obviously got a role to play where we have to, you know, ensure that when we represent the company to the investor, we do so caring for, you know, what they are intentionally looking for here, right? So as I mentioned earlier, for example, at Mondrian Investment Partners, we have one impact product, which would be considered impact from an EU taxonomy perspective. We have other products which integrate ESG to some extent, but I know for a fact that, you know, there are some you know, investors out there which would require perhaps the more impact end of things. So I wouldn't, you know, necessarily reach out and kind of present our products and spend time, you know, getting these investors in front of myself if I knew that our products wouldn't be suitable for them. So you have to, as a conduit between the company and the investor, you have to be very, very sure that you're not wasting anyone's time, whether that be on my side, for myself, or for my investment team that I might be representing, or on the investor side, right? So it's a job to filter out and ensure that we speak to the investors where we have a product suitable for them. And I think it's important. I mean, I would be strange for me to say something else. Obviously, this is my job, but I think it's important we play this conduit because, you know, we do need to save the investment team's time. So I also spend a lot of time, you know, on calls with the investment team, and I also do my you know, the initial presentation of the products to make sure I save time for the investment team not to spend time in presenting to someone who ends up not being an investor, you know, for us. So the investment teams are extremely busy, and you know, you can imagine in the last few weeks in particular, I think we mentioned earlier, you know, with the crisis going on, whether that be the, you know, the Russia oil price, gas price, whatever the impact is on the team, they will be very busy, you know, channeling questions from investors that are currently invested. So as a person representing the prospective investors, you know, have to be extremely careful, you know, when you channel questions through, and I have to try and answer as many of them as possible up front. So I play a mini investment team role, so to speak, and I do get my own training from the investment teams, and have had, you know, as I said, a number of meetings in order to be able to answer some of those questions up front.
I think this is really key to highlight the different roles there are in sustainable finance. So people like Christina are vital, people like Vanessa, like Marina, they're all different parts of this role, but also there are just so many different diverse careers out there for you There's so many different pathways and so many different interests and skill sets that are needed. And even when you talk about the big four audit firms, for example, they're hiring thousands of people now who are climate experts, who are social experts, who are experts in water. And I think in terms of impact and in terms of sustainable finance, there are so many new roles being created, and there are so many roles out there available that I didn't know about when I started studying, and I wish I had. But I'm glad that I've arrived here, and I think it's really key to understand like how diverse it is.
Yeah, it is really rapidly expanding as well. Probably half of them were not in existence when you graduated, Kimberley, right? So, and it is an ever expanding landscape. I think we mentioned before, that it is a very, very rewarding career. It's definitely a place, I think, also for women, in fact, because I think women has a very important role to play. I'm not going to say that we're all risk averse, but we come with a slightly different set of criteria when we look at a firm and a company, and when we communicate around impact. I think in particular, we probably come with slightly more honest, transparent, stringent rules around what we accept. That is my interpretation, hearing these women speak today. And I think we have a slightly different way of interpreting the information also provided, and we could possibly have a slightly different lens that helps, vary and differentiate ourselves a little bit in how we review impacts investing. So thank you so much, everyone, for joining us today. I haven't seen another question. So I will end the call here and thank the ladies very much for your help today and your participation in this panel. I hope the participants have enjoyed it. I did myself very much. And thank you, Gain, for giving us an opportunity to help explain what impact investing means to us. Hopefully we've encouraged one or two of you at least to consider a career within investing and possibly even impact investing.
Thank you so much.
Thank you.
Thanks.
Have
Bye.
a good evening, everyone.
Thank you.